Have you ever noticed ICT mention turtle soup, but never truly break it down? Well, there's a reason for that. It is an incredibly powerful setup, and in fact, all high probability ICT strategies can trace their roots back to the principles of turtle soup. Yet, mastering it requires a level of precision and understanding that often goes overlooked. In this video, we'll uncover why ICT keeps this setup under the radar and how it is the foundation for unlocking consistent, high probability trades. Before we dive in, don't forget to like, subscribe, and leave a comment below sharing your favorite strategy. Now let's dive in to the art and mastery of turtle soup. Jumping straight into the best ICT model and exploring the power of turtle soup, we need to understand what needs to occur and what are we looking for. We are identifying false breakout and CISDs, and to spot false breakouts, we look for stop raids and identify areas where stop raids are likely to occur, buying below old lows and selling above old highs. We also look for displacement, looking for strong price movement into key areas that leave fair value gaps behind. The change in state of delivery setup after a false breakout to look for a shift in market direction. This retracement into the order block created once the CSID is confirmed and closed above is where we look for our order block entry. Popping onto this chart, we can see our big displacement lower into a reaccumulation, break lower, and another reaccumulation. As we see our displacement at a key time with 9:30 open, we take out all the liquidity below the lows, sweeping the lows, then forming our CSID, liquidating and closing above our previous down closure candle, leaving a fair value gap. We see we drive into it, leave the protected low behind, and drive into our highs over here. Time and session relevance is very key to turtle soup. During our Asian session, a range often forms and manipulation sets the stage for London. In the London session, a high probability for sweeping a higher low of the Asian range is set in place. Then we come into New York AM, where the final stop raid before a significant reversal occurs, and or we have a continuation from London. Obviously, you have to look at the daily profile you have in hand and go from there. This can also be seen in a power of 3 integration with an accumulation during the Asian or pre-London session, manipulation during London, and distribution during the New York session. Of course, this makes it very easy to put your market maker buy or sell model framework on there. For an anticipation, we expect the sweep near a key liquidity level and a confirmation with an S&T divergence at the sweep to confirm the reversal. We execute and enter after displacement confirms the shift in delivery. All of these key terms set the stage for high probability order blocks to occur and form, whether you use a low time frame one or a higher time frame one after an FEG has been shown and you use the high probability order block with the retracement, or whether you soup and enter in the low time frame order block. It doesn't really matter to me whether it more matters whether you can see both and understand when, why, and where they form. I don't want to confuse you, so obviously we have this lower time frame order block that we've shown, but say we hop to the 60-minute chart, the 1 hour chart here, right? We then see in that same line, after we displace, we form displacement and an hourly breaker slash order block, along with a 2 and 4 hour one in here. So we see that we retrace higher time frame after accumulating above that high. 1 accumulation, 2 into our smart money reversal into the order block, finding an entry in the low time frame order block down here, or within the high time frame and waiting for us to retrace to it after our true sweep on liquidity over here, and from the higher time frame into the higher time frame FEG, not needing to sweep this previous low. If you've enjoyed the video so far, please be sure to leave a like and comment as well. Even if it's just some emojis, it really helps me out. Getting into liquidity and displacement, the draw on liquidity is the ultimate target. You have to understand where your draw on liquidity is, resting above an old high or low, where liquidity resides. If you're moving from internal to external, you have to understand that relationship on the chart and understand when that protected low is put in with the turtle soup and where our target is with the draw on liquidity with a external high in the opposite direction, the other end of the range. This displacement with a strong break from the liquidity zone where we're looking for a reversal confirms the trade's direction to the ultimate target. I preach this, so please use your equilibrium levels, your OTE levels with your 0.5, 0.68, and 0.79. We use this to anticipate OTE and high probability reversals post a liquidity sweep, seeing where we reject from, where, when, and why, having a narrative and letting it make sense, not making it make sense, letting it fall into your hands. These moves are everywhere on the chart. We'll see, I'll just zoom out just a little bit and we can slide over here and see this higher time frame market maker model to this high with the buy model. We can see that we've displaced and delivered below these lows into a balanced price range / order blocks, delivering internal, external, OTE here, and then respecting and displacing above the high. We left low resistance with trendline liquidity, swing lows here. We also manipulated very hard. Of course, you can't just assume this is manipulation and try and buy below the lows. You can, in a sense of maybe this candle and rejecting, but even at 12, of course, it wouldn't be too perfect, right? As we see there at 11 a.m. could have done a little bit of damage. We could have worked with that. But anyway, so we see here after sweeping, having an SMT at this low, we form a order block / rejection block and respect it. We don't run the low. And in fact, we see from this low to high, we see that we come into an OTE level and fail to close and respect it. Internal, external here, and same thing, but just from this high to this low, seeing us come into the OTE level here and displacing away. So how can I form a narrative? How can I find a turtle soup? And how can I be trustworthy that we're going to continue to deliver? And how can I trust all of it in coordination with each other? Here, this, SMT made sense, but finding a continuation, even inside of here or here, makes perfect sense. We can see, in a sense, we've accumulated above our old highs here, displaced, 1 accumulation, 2 accumulation, setting up for a perfect buy model. We come into this area here, and we can see that we've reaccumulated, displaced above an old high, and left an obvious fair value gap below old lows. So now let's zoom into it a little bit and find how we could find a time-based manipulation, as we can see here at 9 a.m., to deliver internal to external. So zooming in, we can see our high time frame fair value gap here, indicated with this low, and we're on the 15-minute chart as well. We can see our reaccumulation into news, where we manipulate the high, induce more liquidity in with equal highs, and as well as we can see that's our Asia high as well. So after we manipulate, break down very quickly, we leave this data low. So we can see it's 8:30, so this would be a news low. We leave this data low below. We can drop into a 5-minute chart because we can see if this was a rejection block and we took this, we're going to have to see lower time frame why it would make sense that 9:30 didn't spool and deliver. And see, even if we were to take this here, have a stop, after we deliver this internal soup, we should and have to displace above this high, or we're going to react to the internal, external liquidity here, as we see on the 15-minute, right, with that fair value gap, and delivering lower. Because we can't just negate the displacement if we aren't displacing back inside of the range, right? We're just reaccumulating to then manipulate and then draw into our true draw on liquidity with this high and then higher above the Asian highs. So take these lines off, and we can see on the 5-minute chart, like we said, after that internal soup, even if we were entered in the order block here, after that 8:30 manipulation and sweeping that original low into the high time frame fair value gap, right, we at some point would see after 9:30 that we don't break and reaccumulate above the high, and break even would be warranted. It doesn't negate or invalidate that this soup and our second tap into our high time frame fair value gap is not possible. As we can see, it comes into a first purge, second purge, where we then deliver the high. And as we've talked about with our accumulation, manipulation, distribution, low time frame, this delivers right into our accumulation, manipulation, distribution, high time frame. So our low time frame distribution here becomes our high time frame manipulation below our low, below our technical data low on the hourly. If we look on the 8 a.m. indicated here, so our 1, 2, 3 candle model formation, sweeping the range low and closing back within as well. And we did that here, so that's why I tried to show why it would have been valid if you maybe would have wanted to take an 830 soup, but you would have to went break even and followed your rules after not displacing back inside the range and above on old high. So we can see on the 5-minute, even here, we displace and close above and are able to use this previous high to drive price high. We can see also with our fair value gap that we closed above that we were able to use this as a breakaway gap. And even if you wanted to enter in here, internal, external, you can enter under here believing that it's protected. As well on the 15-minute, we see our previous candle liquidate, close back within, and us create a 15-minute order block where, in a sense, if we're bullish, we wouldn't technically need to deliver past equilibrium or the body low, which is very important. We can also see if we come to a 5-minute, so it's a bit cleaner, after displacing and closing above our range, where do we deliver to? Actually, I'll do that high. Right? Very, very close to equilibrium. It would have been perfect if it taps it, of course. I don't want to be too high. Make sure I put it right there. Make sure I put it right there. We can see that we barely don't deliver to it, but with that breakaway gap under it, and if we look on the 1-minute, we can see our high probability order block created here, and then delivered how we saw this internal soup leg here into the protected order block low, and then deliver higher. If you even entered in here, right, the order block would have held, delivered to this high, right, because we never ended up running that low. I'm pretty sure I ended up entering here, right, and having my stop here, after adding in the order block CSID, and then even adding in another time here. So having an add in, seeing this happen and occur, internal, external, with that internal soup, delivering, and then back to an OT of the range, and seeing that we failed to close. And then, riding that higher, and, into the data high, and then I think into the Asian high, which was just a little bit above, and I think previous day high was right there as well, which it is right there, previous day high. So, and this is one we took live in the Discord. So of course it's no hindsight, and just trying to show you right how we established that narrative into delivering, to our true drawn liquidity. I want to keep this one short, but I promise you, go study on your own chart into situations like this, delivering from the order block, even into here, internal, external, order block, OTE, delivery, and seeing this market maker model, stacking all of the things I've taught you in this video into forming your own narrative to the drawn liquidity, and you will find success with Turtle Soup. It is way simpler than it is made out to be, than what you see on the internet, because he doesn't teach this. There's no real easy way to make it. He puts the models for people to understand, but this is the true way the market moves. You will find no better model than Turtle Soup, because every model stems from a buy or sell side run on liquidity, and then right, you get your high probability setup from there. The Turtle Soup is the sweep on liquidity, and you can find no better entry than that. Until the next one, stay safe, guys. Have a great one.